Hi, I'm Jimmy. In this video, I'm going to walk through my top 5 dividend ETFs that pay monthly dividends. Now, I was surprised to see how many monthly dividend ETFs I actually found. I found over 400 of them. So I'm going to try to diversify this particular top 5 monthly dividend ETF list, and hopefully that can get us closer to our personal goal of financial freedom. Now, as you can imagine, I found a wide range of interesting monthly dividend ETFs. Some have dividend yields as high as 9 or 10%, but many of those had smaller amounts of money in the ETF. And then there were ETFs that had a lot more money in them, but smaller dividend yields. So I'm actually going to do 2 different videos. This video is going to focus on the group with more assets in each of the ETFs, and they generally range with dividend yields from somewhere between 3% to, let's say, about 6%. And then I think it's smart to put together another video that has less assets in them, but much higher dividend yields. If that's something you'd be interested in seeing, please let me know in the comments below. Okay, so let's jump in. Now, our first monthly dividend ETF is the Vanguard Intermediate Term Corporate Bond ETF, ticker symbol VCIT. This ETF has a dividend yield of about 3.3%. This is the smallest yield on our list. Then they have assets of a bit more than $27 billion. And then they have a fee of just 5 basis points. So what this ETF does is they focus on buying corporate bonds that have a maturity from somewhere between 5 and 10 years away. They invest in bonds from companies like CVS or Bank of America, AbbVie, Broadcom, Microsoft, the list goes on and on. They have more than 1,700 different bonds in their ETF, so it's fairly well diversified. And then when we look at their dividend history, well, we could see that their dividend history is fairly decent. They've paid consistently most of the time above 20 cents per month for the past few years. So I think this is a decent medium-term bond ETF that could help diversify many of our portfolios. Okay, moving along. Next up on the monthly dividend ETF list is the S&P 500 High Dividend Low Volatility ETF, ticker symbol SPHD. Their dividend yield is about 4.2%. They have assets a bit under $4 billion, and they have a fee of about 30 basis points. So basically, what this ETF does is they take the 75 highest dividend-paying stocks from the S&P 500, and then they narrow that list down further by taking the top 50 of those companies that have the lowest volatility. Then they weigh them according to their dividend yield, which is a bit unusual. Most ETFs, if you're going to weight the companies or the holdings, usually do it by market cap, not dividend yield. So it's somewhat interesting from that perspective. Once again, this is a monthly dividend ETF. So when we look at their dividend history, well, we can see that it's been fairly consistent over the past few years. Now, this ETF can be an interesting way to access some of the top companies, since they have companies like AT&T and Verizon. They have ExxonMobil and Chevron, IBM, UPS, General Mills, Gilead, and the list goes on and on. They have, like I said, 50 companies in there. So they're fairly well diversified with all S&P 500 companies. Okay, our next monthly dividend ETF is the Invesco High Yield Equity ETF, ticker symbol PEY. They have a dividend yield of a bit less than 4%, and they have a bit under $1 billion as far as assets under management, and they have an expense ratio of about 54 basis points. So what PEY does is they hold the 50 highest dividend yielding stocks that are from the NASDAQ, and they had to have increased their dividend for at least 10 consecutive years. So this ETF is somewhat like the Dividend Aristocrats ETF, where they look for companies that have consistently increased their dividends. But one advantage of this particular ETF is that they pay their dividends monthly. Unlike NOBL, which is a Dividend Aristocrats ETF, they pay theirs quarterly. So if monthly is what we're after, this could be a good addition. When we look at their dividend history, well, we can see that they've been consistent enough. In fact, they've grown their dividend a bit more than I would have expected over the past year or so. Either way, this could be a good thing for dividend investors, good ETF to watch if we're interested in monthly dividends. Okay, next up, we have an ETF that focuses on emerging markets where they buy mostly government bonds. This is the Emerging Market Bond ETF, ticker symbol EMB. They have a solid dividend yield of about 4.5%. They have a bit more than $15 billion in assets, and they have a fee of about 39 basis points. Now, like I said, what they do is they invest mostly in government bonds. It's a bit over 80% of their bonds are government bonds. They focus on developing countries. Their three largest countries, I believe, were Mexico, Indonesia, and Turkey. And when we look at their dividend history, well, outside of what appears to be a special dividend of $1.29 towards the end of 2018, well, it's been fairly consistent. Now, I do want to bring out one point that I think is worth noting. See this gap right here? It's a little bit wider in between the lines, and then that one there. Well, that's what this particular ETF does. And I've noticed a few monthly dividend ETFs do this. And that is that they actually pay their January dividend at the end of December. So you end up with 2 in December and none in January and then 1 in early February. They still count this as a monthly dividend, but I just wanted to point it out. Few monthly dividend ETFs do this. Okay, next up, we have a dividend ETF that focuses on preferred stocks called the Invesco Financial Preferred ETF, ticker symbol PGF. They have a dividend yield of about 5.1%, and they have assets of a bit over $1.5 billion, and they have a fee of about 62 or 63 basis points. Now, I recognize that this fee is a bit on the high side as far as expense ratios go, but anyone who knows me knows that although I prefer lower fees, who doesn't, well, I'm okay with the fee if the fund serves a particular purpose in our portfolio. So in the case of this fund, well, clearly they invest primarily in preferred shares of financial companies. And with a dividend yield of a bit more than 5%, well, for me, I might say something like, okay, I'm getting, let's say 5.1% as far as a dividend goes. Is that worth, let's say, a bit more than 0.5% for a fee? So call it a 4.5% net dividend to me after we cover the fees. Now, it doesn't exactly work that way. I just want to walk through one way I think about it. So if we're looking for exposure to the financial sector or even preferred shares, well, this might be a good way to still get our monthly dividends and get exposure to this particular market, and perhaps the fee is worth it. It depends on each of our portfolios. Well, when we look at their dividend history, well, we can see that they've been fairly steady, which is a good sign for us if that's what we're after and if that makes sense for each of our individual portfolios. Now, I know I've mentioned a few times in this video that this ETF or another ETF could be a good addition to our portfolio. Generally, what I'm looking for is good ways to diversify our portfolio. So if the market crashes, hopefully not all of the holdings, not all of the ETFs or stocks that we own go down the same way. Maybe some even go up. Now, if you're curious to learn more about how to diversify a portfolio, I actually did a video on that exact topic. That could be a good next video to watch if you're interested. There's a link here and there's a link in the description below. And I really want to thank you for sticking with me all the way into the video. I really appreciate it. Thanks, and I'll see you in the next video.